There are some very mixed signals being sent today, but what exactly will come of all of this? You came here for the truth, so let me unveil that for you. A major warning signal has been sent from China right now through the economy. I want to bring this to you. I have been talking about this in numerous occasions. This has been very important all along. I've covered it over the years, but we're getting some serious flashing right now in 2021. Of course, we were talking about the China credit impulse, something I have warned about previously. I also want to talk about the repo crisis. So we got a 2-for-1 in this video here. I want to look at the general economy as well. I want to tell you what's happening, give you the updates on that. Not a lot of time. Let's get into it right away. A lot of people have been asking me, what's this whole repo crisis thing? What are you talking about, repos and reverse repos? I had covered this extensively back in 2019 to the point where I was actually having people telling me they're not going to watch my videos anymore simply because I was covering it so often. I broke it down, I explained it, I defined it, and so on. If people are unable to go into those videos to check that out, I will probably do a video in the near future breaking it down, but essentially just trying to give you updates on this one. We'll cover more about that in a second. But let's just look at the total for the time being. You are seeing right now, Monday, May 24th, which matures on the 25th, one-day operation reverse repo coming in at $395 billion in a single day. This has continued to go on. There's an article out of Market Watch that gets into it a little bit, and basically it says a key artery of global financial markets may be telling the Federal Reserve that enough is enough. So imagine they have to print money. They have to buy the treasuries and mortgage-backed securities, apparently. They've got to do this to support the system, and yet we are getting clear signals that they should not be doing this anymore. Very frightening, of course. Demand for an overnight funding through the Federal Reserve Bank of New York's overnight reverse repo program has begun to flirt with recent record highs after almost no one used it for months. So there's a period of time, and once that quantitative easing came in, there was really no need for the repos, reverse repos. This was very quiet. We'd stopped talking about this once we got into official QE, but now it has spiked up. I think this is like the 4th highest we have ever seen, and you are watching the demand for this clearly in effect, but it's mixing and messing everything up because of the way that the Federal Reserve is distorting all the markets. They need to get out of the markets. But of course, if they did that, it would cause mass chaos. Now, this right here is the big one. First, warning sign in global commodity boom flashes in China. Economic expansion and credit impulse may have already peaked. This goes against what we're going to look at in the future, but also back in the past of what I've talked about. Remember, there's always going to be mixed signals. I bring you the data and we cover it as best as we can. If you know out there that there's somebody telling you this is the way it's going to be 100% guaranteed, well then these people are not exactly trustworthy, or they've got a crystal ball. And if that's the case, please let me borrow that, okay? Some prices still have room to rise due to lagging effects. Very clear, that this happens from time to time where you see how long it takes for something to come through. One pillar of this year's blistering commodities rally, Chinese demand may be teetering. Beijing aced its economic recovery largely via an expansion in credit and state-aided construction boom that sucked in raw materials from across the planet. Already the world's biggest consumer, China spent $150 billion on crude oil, iron ore, and copper ore alone in the first 4 months of 2021. So you're thinking, okay, you've got a commodities boom. We are seeing all the indexes for commodities rising. We saw lumber hitting something like $1,700. You are noticing that all of these factors within the commodities have accelerated to levels we haven't seen before. You've got different financial institutions calling this the commodities super cycle. You are witnessing shortages and supply chain problems and everything else compounding all of this. So what's the deal, GPS, tell me what's going on. With global commodities rising to record highs, Chinese government officials are trying to temper prices and reduce some of the speculative froth that's driven markets. Wary of inflating asset bubbles, the PBOC had also been restricting the flow of money to the economy since last year, albeit gradually to avoid derailing growth. At the same time, funding for infrastructure projects has shown signs of slowing. This is something that I talked about, I think it was April 18th, and then I did another video about it saying, hey, I warned you back then, and I said it, like, we're going to watch this, we're going to keep a close eye on it because this is huge, and of course that's exactly what happened. Now what we're talking about here is the China credit impulse, and explains it. The economic data for April suggests that China's economic expansion and its credit impulse, that's new credit as a percentage of the GDP. In the previous video, I covered exactly what it was. I don't think people watched the video or whatever because I did explain it. And I have another one right here. You could see China credit impulse, a measure of changes in new public and private credit as a percentage of the GDP. That's what that means, okay? So you're essentially looking at new credit. New credit, how much is going out there? How much is being lended? And of course, the more that's being pushed out there is going to have an impact all around the world, not just in China. It may have already crested, putting the rally on a precarious footing. The most obvious impact of China's deleveraging would fall on those metals keyed to real estate and infrastructure spending, from copper and aluminum to steel and its main ingredient, iron ore. Big time. So you got to understand what has happened all throughout this period, what has got us here. Now you're going to have a major delayed effect. It's not going to happen tomorrow. We know that probably for the next few months, things stay elevated, at least from where they were historically. And why? Because you've still got the ships that are sitting offshore, just waiting to get to the ports. You've got delays. You've got supply chain problems. You've got, expansion that needs to take place in order to pick up all the slack. So until that happens, you will not necessarily see that reflected dramatically in the price. So if there is to be deflation, that of course doesn't come right away. There are steps that need to happen. Credit is a major driver for commodity prices, and we reckon prices peak when credit peaks. That refers to global credit, but Chinese credit accounts for a big part of it, especially when it comes to infrastructure and property investment. And you could see right here on the chart, the black line being China credit impulse, and then that other line being copper. So that's something you need to know, not just for copper, of course, but other commodities as well. And now for everybody's favorite part of the show, let's talk about the Money GPS insights. Number one, it is very clear right now, showed you just a moment ago, that the China credit impulse, which is so critical, has officially turned negative. It's on a downturn as we speak. So that really, truly, historically brings in a deflationary spiral, but who knows where this will go from here. Number two, we need to understand that if the history repeats itself, this could actually bring on deflation. For the investors out there, number three, this could be a boost to growth stocks temporarily, and commodities could be subdued for the next little while. If people are wondering, what the heck is going on? First, you're telling me one thing, then you're telling me another thing. What's the deal? Is it inflation or deflation? I have said it numerous times. I'll say it again right here for the Money GPS insights. If there is deflation, the government itself can respond. No, not talking about quantitative easing, not talking about what we see with the monetary velocity. Understand what I talk about when I say the government. I'm talking about stimulus checks. I'm talking about helicopter money and a direct injection into people's wallets. That's going to create an inflationary boom. They could do this as a response to real deflation. What they do, I don't know, but certainly I'm paying close attention. You can see it all over the statistics. This happens to be the Chicago Fed National Activity Index, and of course, slowing down. This is just showing you some facts. You can look at all these different activity indexes and so on. All I wanted to note here was that we do see a slowdown that has been going on all over the place. Speaking of the Fed, you know what they are trying to do. The Federal Reserve has, believe it or not, limited powers in what they are able to accomplish. And of course, what they try to do actively is to expand their balance sheet. And the Fed's balance sheet could reach $9 trillion by the end of 2022, according to the Fed. And they have to do this, is very important, because the goal is to actually devalue the currency. We know that already. Ben Bernanke talked about this back in 2002 in his famous speech. The Federal Reserve had little choice last year but to promise pedal to the metal monetary accommodation for the foreseeable future. And they basically go on to say, look, they need to start walking this promise back. Stop promising investors that we're going to take care of you. I can't believe I'm actually reading this out of Bloomberg, but it's here in black and white. It's interesting to see that. And what else has the Fed said? Well, according to Lael Brainerd, they're actually now pushing a digital dollar as central bank currency race heats up. All of the central banks are going to impose these new central bank dollars. In the case of China, you got to understand what they did. They put in their trial anyway, they put a expiry date, if you will, to actually get people to spend the money. Now imagine your currency had an expiry date on it. It essentially does when you put negative rates, in a sense, but what does that do to the value of the currency, and what does that do to the individuals holding that currency? I think, to me, this is frightening, not to mention the level of control that they have. Speaking of control, the G7 and our wonderful supranational organizations, the G7 is close to an agreement on taxation of the world's largest companies, apparently getting closer. I do believe that they will make this happen. And what are you going to do with all that extra taxation that's going on? What are you going to do when you've got a problem that is simply not enough people working and the stimulus checks being handed out? What do you do? Well, you can just replace those jobs with robots. Apparently, warehouses look to robots to fill the labor gaps and speed deliveries. Understand that robots and automation will be taking over many of the jobs, and the apparent solution is that people will be given money every single month. I'm not sure if that's going to work out, but the Great American Cleanup. Deodorant, teeth whitener fly off the shelves. And there's so many interesting things here that, it's been so hard to predict, but you've seen some wild things. First it was the toilet paper, and then it was, patio furniture, and, there were all these cycles. The demand for all these different products has really changed over the last, year and a half time frame. And now apparently people are starting to go out in public and wanted to change their buying habits. So it's interesting to see which stores, which products will see those demands really increase. So I just wanted to bring that to you. And then to talk about this, the IRS wants tools for cracking crypto wallets. If you see what they actually talk about, it's quite interesting because they want to suggest that what people are doing with their cryptocurrencies is all illicit activity, and they either want to be able to tax it or they want to take when they can. And we know that this was always the goal in the beginning. Whether or not they'll be able to do that, we'll see. This time we don't have any evidence of that, but if you know anything, please post it in the comments. I know they're trying for quantum computing and so on. We'll see what happens, I guess. This is so important. It's so key to understand. When I post a video, it doesn't necessarily get to everybody. It only goes to a small percentage of people. The way the algorithm works, it goes to a small percentage of people. If those people share the video, if those people engage with the video, then it goes to more people. If those people then share it and engage with it, then it goes to more people. It doesn't go to everybody. So that's why I want to set up, or have set up, the insiders, because the insider is going to enable me to get to you directly. So you sign up to the insiders, it's free. I email you 5 times a week, basically just giving you the video. That's all. It ensures that I can get to you directly because their algorithm, quite frankly, part of the shadow banning process and everything else is basically trying to do what they do. Okay, so I set up the insiders, and there are other things. I'm just gonna say it now. You know what I've planned. What I'm doing right here is I'm going to be turning off the ads, and I'm going to be looking for sponsors. I'm looking for sponsors to sponsor my work. This is something I thought long and hard about. Initially, I thought, no, not a good idea. But now when I look at the actual advertisements that are playing on my videos, I got JP Morgan, got Monsanto, all these different things that I do not approve of. I do not like this. But I do it because it brings revenue in for the business. Small revenue, by the way. Many people now don't watch the advertisements. They skip them. They use pop-up blockers and so on. So I am now going another route. I'm looking for small and medium businesses that will support my work, and then we can do a sponsored video. And the whole premise here would be to get around what they do. I will turn off the ads so that they don't get the revenue. So that this system of control, I can use it as much as I want, but they don't get any control because I have the insiders, because I have my own source of revenue. My goal, if possible, would then be to start hiring people to create jobs. That's what I want to do. I want to create jobs. I want to bring work. I want to actually pay people a good salary. This is what I'm trying to do. I hope, truly hope, that you see it from my eyes the way that I see it, being the creator here. I've been doing this for 10 years. It's been a long time. None of these things are an easy decision. I got the tech side going on. I'm emailing people every day. I'm trying to fix the website. I'm doing all these different things, and I'm scrambling. Okay, I barely know how to do any of this stuff. But I come out here, I try to do my best, and I hope that you support me. If you want to give me a thumbs up, please do. Appreciate it. If you haven't seen this video already, definitely want to check it out. Click it, and I'll see you there.